This is a great question. Why do we see these style rotations or thematic trends in venture capital or the primary market? Why do we see this campaign-style investing, where everyone chases trends and talks about the wind outlet theory? There are a few issues. First, what you said is right. Many of our companies, the work they are doing is arbitrage. Wherever profits made, that's where they go. Policies now clearly emphasize hard tech, are tech-friendly, and less consumption-friendly. Arbitrage-driven companies are sensitive to this. So you see what's happening with tech companies. Take the chip industry a while back, or recent star market listings, everyone sees how badly the star market has performed. So when everyone rushes into tech, into chips, or into clean energy and other tech sectors, it's just like chasing the latest trend. For us in the primary market, this is really obvious. What's really going on here? Between the primary and secondary markets, between industrial policy, national policy direction, and actual market behavior, there's a significant force of arbitrage at play. But whether what the government supports is actually what the market needs, and whether it can withstand the test of time from both market and industrial policy perspectives, whether it can survive, allow healthy industry development, and produce good products and brands, these are all open questions. So this is our first point. Secondly, for primary market participants, P, private equity, VC, venture capital. P and C, private non-corporate capital, this issue is common. Because we had loose monetary policy and an oversupply of currency, with a large amount of capital circulating within the financial system. I think that many of our financial institutions, licensed entities, or even firms like us, whether VC or PE, are essentially engaged in an arbitrage game. They don't really have strong strategic resolve, nor do they possess significant macroeconomic research or a deep-rooted potential for driving China's economic development. Nor do they study the underlying logic of total factor productivity and its impact on China's economic growth, developmental path, or the stability of the Asian business environment, the relationship between technology and consumption. Instead, they pursue arbitrage opportunities. These arbitrage-driven funds themselves tend to engage in thematic investing, momentum-driven investment, and very frequent sector rotations. So what exactly are these investments? Strictly speaking, these institutions are not very mature. They are essentially engaged in speculative trading and arbitrage. As we know, there are many types of arbitrage, including policy arbitrage. This type of market activity is also a kind of arbitrage. For example, arbitrage between companies listed in the US and China, or in the Hong Kong market, because policy differences create price discrepancies, such as differences in IPO pricing and price-to-earnings ratios. There are also arbitrage opportunities involving various financial instruments and markets. Whether it's A shares or B shares, since we have different types and structures, and we also have a multi-tiered capital market, these all provide opportunities for arbitrage. Whether it's the main board, SME board, Xinext, New Third Board, or Beijing Stock Exchange, all represent market vitality and the use of financial instruments for arbitrage and other activities. We need a scientific view of speculation and investment in arbitrage and anti-arbitrage. The opposite of arbitrage is value investing. Investment and speculation are like twin brothers in the financial market. We always advocate for everyone to invest. Investment in capital expansion must not be disorderly, which is why the country opposes it. If we constantly engage in arbitrage, and financial institutions and private equity are always involved in it, capital can easily expand uncontrollably. Chasing trends, speculating on hot topics, and arbitraging fads, these styles rotate frequently. Without strategic determination or professional capability, opportunistic arbitrage can lead to disorderly, weaponized capital expansion. The country emphasizes guiding capital toward healthy, orderly growth, opposing unchecked capital expansion. It tells us to distinguish investment from arbitrage and investment from speculation. More investment, less speculation, more value investing, less arbitrage activity. Because investment is essentially discounting cash flows, the present value of a company's future cash flows. So what is speculation? Speculation is when you take advantage of market volatility, policies, financial instruments, interest rate, spreads, information asymmetry. or whatever else the difference in trading methods, or the money made from volatility, or the money made from spreads. So what's the third issue? We also need to rationally and dialectically consider the reasonable relationship between investment and speculation. Speculation also plays a role, providing market liquidity and keeping trading active. If everyone only did value investing, it wouldn't work, as you might hold for 3, 5, or even 10 years without moving or trading. Constant traders and arbitrageurs are needed because they are basically short-term thinkers. There's rarely long-term thinking involved because aggressive speculation is, at its core, a short-term behavior. That's why you see quick reversals in active trading. So in theory, it provides ample liquidity. That's why, in a mature, healthy, orderly market, both speculation and investment are indeed necessary.